Hey guys, just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Hello guys, how are you doing? Hope everything is fine or getting better. Now, after this drop on Friday, the market is chilling a bit and forming a range here. So I have a few levels that I'm watching now. So let's not waste our time and go through them. First of all, I'm looking at HTF structure and some lines that are supporting it. Here, we have a parabolic line that touches all significant lows. And with that drop, I adjusted it a bit so it has a slight touch on the drop. Now, trend lines are nice to use, but need to keep in mind that it's always in the eye of the beholder how one draws the line. Anyway, for now, based on that, we would like to see this parabola hold. That means, best case, no weekly closes below it, because that would invalidate this banana move up and either start to range longer or would have the chance to test lower levels. Until then, that's our parabolic line acting as support. Then, if we switch to the logarithmic chart, we can see a nicely going trend line that got touched as well. That's basically the entire bull market trend line, and that adds confluence for this level and whatever happens with that level. But usually, it's support until it's not, and it needs to be treated as such, meaning looking for signs of strength if you think it holds, and signs of weakness if you want to see lower prices. As confluence, we add a weekly chart and the 50 EMA and the cloud. What we can see here is that this EMA on the weekly is supporting every low with a bigger drop. That means as long as it holds, we look for sideways and up, and if it breaks, well, often sideways and down. And now we have three confluences for this area: the parabola, the trend line on the logarithmic chart, and the weekly 50 EMA cloud. Now I add another indicator, mainly the super trend. And here we can see on the weekly time frame, the level is mostly aligning with the EMA and parabola. Yes, it's slightly lower, but that's still an area of interest. It doesn't need to be to the dollar level. And now I add another indicator, the white rabbit cycle. And here we can see the weekly cycle level is at 108K as well, meaning in the same area as all these confluences. So it's a bigger area where we look for reactions and setups to get involved. We can mark out the weekly SR level that we had already previously. Well, not fully expected it to get touched, and especially not like this. But we know these things happen, and you always need to keep that in mind. Not fearing it, but learning to live with such moves, and that means protecting capital. Maybe trade with less size or lower leverage, because you have to be ready for these moves and also be able to trade after such moves. Sadly, not all survive those wrecked candles. Okay, now we have marked out our weekly SR level, and we see all levels coming together here, so that makes for me an area to look for setups. That means a retest of a level or local range, and then an SFP and structure break. Or if you use Elliott waves, you look for some finished waves inside that area. That would give you the extra confluence or a setup to manage your risk. That means we are always looking for the structure and the confluence for that. In our case, the parabola, the trend line, and the weekly EMA together keep the overall trend structure intact. Above this level, we have price that forms bearish or bullish price action and simply goes up and down while moving to the right. The structure inside the price action zone can be broken and switch back up again, and it doesn't much affect the overall market trend, unless the point gets broken, which usually leads to sideways and down. For us now, we have regular market structure that, as it stands, is pointing up. It's in an uptrend. While we've had some ups and downs, the main thing is that the overall trend keeps making higher highs and higher lows, and that's not bearish until proven otherwise. Anyway, what you're looking for is a complete structure in that level. For me, it's a range and SFP, and best case, some structure breaks, so I can manage my risk, because then I have a local invalidation. Or, for some, it's waves. They look for a 5 move down or a complete 3 waiver. Best case, that all ends in the higher time frame level. For example, you finish a 5 move down, price hits the HTF POI. Check, it finishes in 5 waves. Check. Now we have a local structure break. Check. Now you have your local invalidation and a trade if, of course, you have a target as well. But that's just an example. For me, I often trade it on a touch of the level as well if I have some stats that support my bias. And of course, we should not forget time, as it's usually more important than price, but they work very well together. Mainly, if price meets time, we often see a reaction. We saw that, for example, on our fib time price chart. When these two friends come together, we often see some action. In our case, we also use some simple time cycles. For me, it's the lunar. I like that one. And here, if we switch to it, we can see the next timing would be near the 24th of October. And here we would have a time window. I'll explain why soon. But to finish the idea with the bigger trend that we have, then the level that's all coming together at one area, mainly the parabola, the trend line, the weekly EMA cloud, the weekly cycle timing, and the lunar timing. And I'm sure, and I know there are more other things pointing or aligning with that area here, which makes it important. Best case, we look for a setup when price meets time. That means when it comes near the cycle times, we want to see either a higher low if it's in an uptrend, or a bottom formation when it's near the low of a range. That means often it's best to wait a bit for these events. Now let's have a look at another event that's happening, and that is the FOMC event. Here we had some stats as well. So, what we have here are the FOMC events, and I'm looking for a reaction or reversal to occur, on average, around 4 to 5 bars on the 2-day chart, which means roughly 10 days. This can happen either before the FOMC date or on the FOMC date itself. Sometimes the move extends a bit longer, like we've seen 8 or even 10 bars before, but the average reaction time remains between 4 and 5 bars. So, if the move extends, we could say that the recent drop we've already had, which lasted about 9 bars before the event, might have already formed the low. But in my case, I prefer to stick to the average window, which gives us a time zone between the end of this week and the start of next week. And right in between those dates, we also have our lunar cycle timing, which happens near higher time frame support, the same area we discussed earlier. The trend line, the parabola, the weekly EMA, the daily and weekly cycle timing. All of that gives us a strong confluence zone to watch, both in terms of price, the SR level, and time, the reversal window. In the best case scenario, we'd like to see the move down complete within this time window, whether that means a higher low formation or a final move down before reversal. So yes, price could range here for a while, but ideally we want to see a bottom formation during this time window. Whether that's a higher low, if the move up starts now, or a sideways and down move with maybe an SFP of the low before turning. That SFP doesn't always happen, but the main point is to have the bottom formation or reaction occur within that time window, because that's when we can assume that the previous move was just a pricing in phase before the reversal. If we look at the historical behavior before FOMC events, what usually happens is that we see a move down into the event, and then very often a reaction or reversal in the opposite direction. It doesn't happen 100% of the time, but statistically, there's about an 83% chance of a reaction, and about 17% of the time, we don't get one. In those cases, price tends to continue with the trend, usually reacting on the FOMC day itself instead. So right now what we have is a price level / support area from all the confluences mentioned earlier, and a time window from both lunar and FOMC statistics. This makes for a high probability reaction zone, whatever reaction means for your trading plan, whether it's a short-term bounce, a range, or a full reversal. If we now switch to the yearly fib time plus price chart, we can see that there are levels aligning right around this support area too. The next yearly fib time is still a bit away. It's coming next month. And historically, this yearly fib time tends to mark the tops. So, what that means is, either we get a rise from the current price into the next yearly fib time, or, for the first time ever, Bitcoin already formed a top at the October fib time, and we'll see a longer sideways range before continuing higher again. That's something we can look into later, once or if the local idea gets invalidated. For now, I'll stay focused on the current time window, the lunar and daily cycles combined with the pre-FOMC reversal window. If we don't see anything significant happening during that period, then yes, the move could extend longer, but I'll only start expecting that once it's confirmed. Now that we have that established, let's take a look at the local levels. We can see that we had our weekly order block here acting as a level, together with the lunar timing. Okay, now I'll mark out the averages and see what we have locally. Before I start, I wanted to mention Patreon. If you want to support or learn something, you can always join there. You can ask questions, and I post my trading updates and explanations of what I'm doing. You also get access to the Rabbit Box strategy for 1 month for free. By the way, I'm planning to make it free for all members as long as they stay, so that part will change a bit soon. What you'll get then is main access to the Telegram group, all the content updates, and the Rabbit Box strategy, which trades on spot, as you already know. If you don't, make sure to check out the video. It's my strategy with a very high hit rate on spot. If you're patient and wait for proper setups, you're usually rewarded with this strategy. So yeah, I'll be updating the tiers soon, and the strategy will be free to use as long as you're in the group and learning. Now, let's get back to the local levels. Okay, what we have locally. First, the average loss for today was hit really early in the morning. That's where I had my TP1, and now here locally, I've also hit TP2 on the short. This trade was taken yesterday as a hedge, which I already updated in Telegram. Now, I had to do that since price broke below the SR level, and a lot of people missed the move from the lows, mostly those who were bearish the whole time and wanted lower prices but sadly didn't get filled. Don't think it's a zoofall, coincidence, cough cuff. Anyway, to give them a second chance, we shorted it to get those lower prices, and now TP2 has been hit. The overall target for this trade would ideally be the local lows, but for now, it's not fully clear what kind of range we'll get here. That means, will it be a sideways range with a cleanly defined top and bottom, or something choppy going up and down? In the second case, the low could remain untouched, and that's why it's so important to pay yourself on local SR levels on the way up or down. Locally, at the top, we have equal highs, which are not the best, to be honest, so that's a target for later. Now, level-wise, we have a weekly order block, which is now the bigger SR level, together with all the confluences we talked about earlier. Of course, we also have local levels in case we don't get the full wick filled. I mark these levels as a box, which includes the previous yearly high, a 4-day SR level, the weekly wick equilibrium, the 2-week wick equilibrium, and the previous week's 0.25% retrace zone. That's our daily swing low area, together with the daily cycle time sitting around 108K. We also have poor lows locally, so yes, that's definitely a level of interest. If you add a fixed range to the chart, you'll see the value area low sitting in this same zone, mainly on the daily level. So what this gives us is a clear structure of interest. First level, the daily level and veil. If that fails, then the next lower confluence zone, where I'll be looking for a trade. Now, if all of this fails, then we have the lower weekly OB with all the bigger confluences, like the trendline and weekly EMA cloud. That would only happen if this range breaks down completely. What I'd want to see then is a reclaim of the range, which would mean a deviation setup. And in that case, we can trade it back up to the mid-range. Now, as mentioned before, we don't fully know how this range will form. Maybe it'll be a clean sideways phase, or maybe it'll be an ugly, choppy down move. If it's the second case, we'll likely grind lower and hit that time window we discussed earlier. With that said, manage your risk and pay yourself on local moves. If price, after a drop like this, starts ranging for longer, that's where a lot of people get trapped because they start revenge trading. People who lose money often try to make it back fast, which fails most of the time. They act emotionally, entering trades hoping for breakouts or continuation, and stop focusing on actual profit taking. Usually, they get too greedy, end up stopped out, and lose again. That's the sad cycle. So, pay yourself, or don't trade if the situation isn't clear. And if you want to trade spot instead, you can join and get access to the Rabbit Box strategy, where you'll learn patience and how to wait for setups. Anyway, locally, I have this lower level where I'll take the next profit on the hedge. I'm also still holding a long from around 106K, so if price comes down here, I'll look for a scalp. But to add to the main position, I'll wait, ideally for the time window we have later with the lunar and FOMC events. Then I'll decide whether we're still in the range and maybe forming a setup, or if price is higher and forming a higher low instead. The invalidation for all of this is simple: a HTF break below the bigger support level. That would mean a much longer sideways phase. Anyway, that's not confirmed for now, so I'll first look for a range before the next move. Looking at this move down, it's already below the average and quite exhausted, so I wouldn't be surprised to see a bounce from here. If it does, watch the VWAP and monthly open on the rise. If they act as resistance, then we'll likely chop around and make another leg down. But if price reclaims them, then the chance increases that we'll form a slow, sideways up channel instead of continuing lower. For me, I'm staying in the hedge, as I already took profit, and I'm still holding the long. I'll look for scalp or day trades if price hits the daily level with the VAL, or the lower level with the wick and retracement confluences. Only if that fails, I'll look lower into the weekly OB again. That's basically the plan for now. If price pushes higher from here, so be it. I have rabbit box trades running, and it's not too late to join the trade. For the downside, the long is hedged, so now we wait to see what picture the market draws, and then we'll make the next decision. That's it for today. I also updated the stats yesterday, and for now, I'm not worried. I'll only change my bias if it gets confirmed. With that said, I wish you a good day and see you in the next one.